Corporate Finance Excel Practice Problem. In this presentation, we will work a practice problem in Excel related to sales projection with multiple scenarios. Get ready, it's time to take your chance with corporate finance. Here we are in Excel. We have our information up top, and in the white area down below, we're going to do our calculations in the blue area. What we're going to have is three different scenarios, and we're going to try to get to our expected sales number under these three different scenarios. If we're trying to project into the future, this is one way that we can use if we have different scenarios to get to a bottom line number for our projection. So we have the expected sales of units under three scenarios. What is the expected value of the total sales projection? Scenario 1, we're going to say the units are 350, the price is 37. So this would be scenario 1. We're going to say that this is 310 times 37. That would come out to 11,470. And then scenario 2, we're going to be picking up the 555 times 50. This is scenario B, or the second scenario. And then under scenario 3, we've got the 865 times the $65. So if these are our expected three scenarios that we're saying, well, these are three things that could happen in the future, and we're trying to figure out, okay, what's going to be the total sales dollar. One way we could do that is we could say, well, let's assign a probability. How likely do we think these things are going to be happening? This is all estimates, of course. This is a way to use estimates and probability so that we can try to project more efficiently into the future. But obviously, these are projections, so therefore we would have to come up with some type of projection for the probability of these three scenarios taking place. So if we came up and said, okay, I think scenario A is about 20% likelihood, versus B 50% versus C 30%, the total percentage should add up to 100%. Then we can use these three scenarios to figure out what the expected value is by taking the probability of each of them happening. So we could then say, okay, let's take this 11,470 and multiply it times that 20%. Let's take this 27,750, multiply it times the 50%. Let's take the 56,225, multiply it times the 30%. Add these up, equals the sum of these three numbers, and that'll give us our 3337 for our total projected sales amount. So this is one way, again, to kind of figure out three different scenarios and see how we can move forward by basically using probability to do so. Let's do it one more time. Let's go to another item, the second tab. This is the practice 2 tab. We have the same information. We're gonna do the same process here, but now we've got different probabilities and different units and sales prices. So once again, we have three scenarios. We're gonna calculate and estimate out as if those three scenarios happened individually. Then think about the likelihood for each of those scenarios to be happening, which will be an estimate because this is all estimates. We're projecting out into the future, and then we'll apply the likelihood of those three scenarios. So we're going to take this will equal the 420 times the $18. This is going to be equal to the 729 times the $27. This will equal the 1101 times the $29. Then we're going to say that the likelihood of A, B, and C is 40, 40, 20, adding up to 100%. Therefore, we're going to say, all right, let's take the 40% times the 7560. Let's take the 40% times the 19,683. Let's take the 20% times the 31,929. And if we sum those up, adding them up, we can get to our projected total number using this method. So once again, this is can be a useful method in certain situations where there's going to be different scenarios in the future to try to apply out and push forward what that projected number should be.